In this video, I'm going to teach you a secret trading strategy that is very accurate. Just make sure you watch this video until the end and let's get started. In this trading strategy, we have two indicators. On TradingView platform, here we click on indicators and we search MACD, this one. Moving average convergence divergence, and we need to change its settings. So we go to the settings of MACD, and here in the inputs tab, for the fast length we set it at 34, and for the slow length we set it at 144, and then here in the style tab we remove MACD line and signal line because we only need the histogram. And now we need to add the second indicator. So again, here we click on indicators and we search RSI, this one, relative strength index, and we need to change its settings. So we go to the settings of RSI, and first here in the inputs tab, for the RSI length we set it at 2, and then here in the style tab, here we remove RSI moving average, and here for RSI upper band we set it at 90, and for RSI lower band we set it at 10. Alright, everything is already set on the chart, and let's see how we trade based on this trading strategy. Before we start, I'm proud to announce that recently I published a book, The Art of Price Action Trading. The link is in the description and you can get it later if you're interested to learn price action trading and take your trading to the next level. Alright, this trading strategy is suitable for short time frames because we are going to catch a sudden increase of momentum that happen in short period of time, not extended movement of the market. So time frames like 1 minute to 15 minutes are suitable for this trading strategy. Right now we are on 1 minute time frame. This is the price chart of euro to US dollar, but no limitation on this, and you can use this trading strategy on any other asset or market. The only requirement is high trading volume and liquidity, because the profit and loss that we're gonna take are very small in terms of price movement, so we don't want to experience any unreal price gap or large spread between bid and ask prices that can damage our trade entry, stop loss, and profit. Alright, let's see how we trade based on this setup. By the help of MACD, we identify trend of the market. When MACD histogram is green, which is when MACD histogram is above the center line, this tells us that the market is trending up, and when the MACD histogram is below the center line and red, this shows that the market is trending down. When the MACD histogram is above the center line and green, here by the help of RSI, we look for long position opportunities. If you remember, we set the oversold level at 10 and overbought level at 90. We set extreme levels for overbought and oversold, so only in cases where the RSI is extremely overbought or oversold, we take action, because this situation offers a higher probability of reversal. We also set RSI length at 2, so it will help us to catch short-term and sudden momentum changes that are happening in the market. So when MACD histogram is green, here in RSI, we look for the times that RSI line reaches to or goes below 10. Then we wait for the RSI line to close back above 10. When the RSI line is closed above 10, instantly we check the bar at MACD histogram. If it is dark green, we enter a long position. If it is light green, like this case here, we wait one candle more. When the next candle is closed, if the bar is dark green, we enter a trade. In this case, you can see that it didn't happen, so we don't enter any trade here. The reason we want dark green for the bar is because it shows increasing of momentum. Light green shows that the upside momentum is decreasing. In this case, you can see that the price is moving flat after that. We have another signal here where RSI line went below 10, but when it is closed back above 10, which happened at this point, the bar at MACD histogram is light green, and even for one candle after that, we didn't get dark green, so this signal here is rejected. Again, you can see that RSI line went below 10 and it closed back above 10 at this point. When we check the bar at MACD histogram, we can see that it is light green. We wait one more candle, and when the candle is closed, you can see that we got a dark green bar, so the buy signal here is confirmed and we can enter a long position at this point when the new candle is opened. The stop loss for this trade is placed below the previous sewing low, and profit target at 1.5 risk to reward ratio. Here you can see that RSI again went below 10 and then again crossed back above 10 at this point, but the bar is light green, and even one candle after that it is light green. So because we didn't get dark green, this signal is rejected. Moving on the chart, again here we have another 3 signals of RSI where RSI went below 10, but for 3 of them after the RSI closed back above 10, the bar at MACD histogram wasn't dark green, and even one candle after the signal we didn't have dark green. So in practice we don't enter any trade based on these signals. And on the other hand, when MACD histogram is below the center line and red, we look for short position opportunities. Here in RSI, we look for the times that RSI line reaches to or goes above 90. This shows extreme overbought and possible reversal of the price. We wait for RSI line to close back below 90, which happened here, and then we check the bar at MACD histogram. It should be dark red. If it is not dark red, we wait one more candle. When the next candle is closed and we get dark red, the sell signal is confirmed and we can enter a short position at this point when the new candle is opened. The stop loss for this trade is placed above the previous swing high and profit target at 1.5 risk to reward ratio. The structure of this setup is in a way that when a reversal is happening or the market is in a trading range and the MACD histogram repeatedly changes color like here in this part, we don't encounter many false signals like other trend following strategies, but still trading ranges and times that the price is moving flat are potential areas where you can get false signals. You can filter many of them by the help of another indicator like ADX or price action trading concepts, but you cannot completely avoid false signals. This is not possible in reality, and there is no trading strategy with 100% win rate. So you need to manage your risk properly so you can minimize the effect of losing trades on your trading account. There is a risk management strategy that is called 1% rule, and it's one of the best risk management strategies that you can use. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it because without a proper risk management strategy, you cannot become a consistently profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.